back. This is Boomer Life on CL 650.
Welcome to Boomer Life on CL 650. I'm Joanne Sutton. Today we're speaking with Jim Doyle, Senior Financial Consultant with Investors Group Financial Services. And we're speaking to the benefit of taking the time to review your finances, whether you're single or with your partner, and for those with children, with your family. And right now we hope to focus on retirement a little bit and talk about ways that you would like to maintain your standard of living, because that is your expectation. So Jim, I do acknowledge that we all have certain expectations that we don't even realize we have. And understanding why having a plan to hit those goals, your personal goals, is uber important. It's encouraging to hear from a professional like yourself that even if you and your significant other have totally different money perspectives, that you can learn to reduce financial conflict and take some steps to ensure financial harmony as it becomes part of your retirement perspective. So let's talk a little bit about when the dream just doesn't live up to the reality. We have this picture in our mind of what retirement's going to look like. So is there a list of top mistakes that people are making and how they can avoid this when planning their retirement?
Some mistakes you just can't recover from.
When we've learned that the hard way.
My job is to help clients avoid these mistakes so they can enjoy a comfortable retirement. Many of the mistakes are due to a lack of knowledge or inadequate guidance about planning for retirement. They simply don't know what's best for them in all instances, especially when it comes to thinking about how to fit all the pieces together that make up the retirement puzzle.
So what do you actually feel are some of those retirement mistakes that you can help your clients avoid? Do you have a list?
I do, okay? One of the biggest has got to be the lack of a written financial plan with clear goals. It's not just having something to measure progress by. It's about the effort and the thought that goes into creating one. A financial plan must have measurable goals and strategies for achieving them. The problem is that many people say they have a financial plan for achieving their retirement goals, but most often it's in their heads.
You've just read my mind. Everything is in my head. I have the vision. Well, it sounds like some of these people still lack that simple plan that looks at retirement from a long-term perspective. What other kind of pitfalls do you see?
Well, another pitfall, it's hard not to hear this one on the news frequently. Canadians are not saving enough. I think most of us have difficulty thinking of retirement being potentially as long as the years we spent building those same savings. One way to avoid this is to use projections of how much actual income they might need in retirement, and then we can help plan the amount of savings that they might need for the future.
Well, if I was to make a guess, I'd probably think it has something to do with expenses, because you haven't talked about that yet.
Joanne, you're right on the mark. Many retirees don't start retirement with a retirement budget. In my experience, they just want to start enjoying their retirement. They feel they have time to look at the numbers later, spending whatever comes in. And that also includes how they use debt. These two items make planning for unexpected events hard to resolve without impacting their investment values or future incomes.
Well, that also sounds like there's a lot of risk involved as well.
Well, the final pitfall is actually about taking risk, either too much or too little. I get it. As people get closer to retirement, they tend to become more conservative, reluctant to take risk in the belief that less risk is better than some risk, suggesting that even a balanced approach to taking risk can also be a challenge.
So over the past several shows, Jim, that you've talked about how longevity is a substantial challenge for many financial plans.
Longevity has to be considered as part of this retirement planning pitfall. But if your investment knowledge is not good, I really understand why many retirees can feel that conservative investments are appropriate for them. Long-term inflation is not going to go away. Without investing in equities, how do you intend to meet your long-term growth goals to maintain their current standard of living?
So, Jim, help me if I've missed any of the common retirement planning pitfalls that you can help clients avoid. What it really takes to retire is a solid grasp of your budget, a carefully considered investment and spending plan, debt that's under control, and a plan you're excited about how you'll spend your days. If you'd like to do something different about your financial future, I would like to encourage you right now to give Jim a call. Call his team. See how they might be able to help you. Here's his number, 604-682-5431.
You know, I've seen clients work their full lives and then start their retirement with no idea what they want to do in retirement.
So in your practice, do you ever come across someone who's just come in and they're actually not in good financial shape to retire?
While every case is unique, there may be a few items we see that could suggest a revisiting of your retirement objectives. The first one is if you have too much debt and you're struggling to pay your bills. The second is cash flow. Once you retire, the paychecks stop, but the bills keep showing up. You need to map out your monthly cash flow before you retire. The third one, having a long-term financial plan. And while no one knows how long they will live, you should understand how long your savings will last and what spending level you can maintain over the coming decades.
Well, it sounds like the old Boy Scouts rule, like be prepared. When dealing with retirement, it's not like you get a second crack at it.
I think retirees have two things working against them in retirement. They're forced to withdraw money from their RRIFs, whether they need the income or not, but they lose the tax sheltering growth on the funds that they must withdraw.
So what's the second thing?
They can't add back to their RSPs once they're over 71, unless their spouse is under 71, so they can't get a tax break. One thing they can do is contribute to the tax-free savings account.
Well, it seems like for many Canadians, TFSAs are becoming the preferred retirement savings vehicle. So when you compare them to RSPs, who wants to deal with taxes in retirement when you could be enjoying the fruits of 40 years or more working full-time? Could you tell us a little bit more about the importance of TFSAs?
I really like TFSAs for retirees. I like the idea of building ongoing savings. You never know what your needs are going to be in the future. One of the nice features of the TFSA is that you can withdraw money from your TFSA and you can put it back in, but not in the same year if you've already contributed your TFSA maximum.
So what are the actual current TFSA limits? Didn't they just change with the new federal government last fall?
Yeah, they did. This year's TFSA limit is down from the $10,000 new contribution room that we had in 2015. This year's TFSA limit is $5,500. If you've not contributed your TFSA limit, the lifetime total is now $46,500, and you can use it for anything you like, emergencies or travel fund, or you can invest it and make it part of your retirement income.
Well, it almost sounds like just money sitting in a normal bank account. Are there any other features that make TFSAs worth looking at?
The income a TFSA makes is tax-free, and that includes interest, dividends, or capital gains. There's no taxes on withdrawal either. You can designate a beneficiary or a successor holder if you have a spouse.
Well, then I have to ask, what's the benefit of having a beneficiary or a successor holder? And is there a difference between the two?
One benefit is when you name a beneficiary or successor holder, you avoid probate fees when you pass away. Given that TFSA balances are getting bigger, this might be a pretty nice savings in the future. As to the question of whether you should name a beneficiary or successor holder, if you have your spouse as a beneficiary and the TFSA value as of the date of death, this can pass to your spouse tax-free. But if the value grows, by the time you get around to moving it over to your spouse, then that growth is taxable. You'd probably better name your spouse as a successor holder. This way, when your executor or your executrix gets around to moving your TFSA into your spouse's name, all of it is tax-free.
Well, this is great information, Jim. Do you actually feel that people are using their TFSAs to their best advantage?
If there was one message that I'd like to emphasize about TFSAs, is that they could be invested to generate a tax-free source of income in retirement. With 53% of TFSAs sitting in cash and the balances starting to become more sizable, that's too much money not to be earning a decent return on. If people are going to continue to add to their TFSAs going forward, they could be missing out on a real benefit.
So don't just put your TFSA into a cash account. You're telling us to actually make an investment with them.
Consider your situation and make sure that that fits your objectives.
Absolutely. Thanks for sharing that information on tax-free savings accounts. Some really good tips there. And for our listeners, it's always a good idea to review your investment strategies to see if they actually match your goals. If you want to learn more about Jim Doyle and how he can help financially comfortable Canadians like yourself, all you have to do, give him a phone call, 604-682-5431. I'm Joanne Sutton. Today we're speaking with Jim Doyle, Senior Financial Consultant with Investors Group. We'll be looking at actionable ways to successfully alleviate and manage finances in the next segment of this show, because those who manage money stress most effectively, they don't do it alone. We want you to start 2016 off on the right foot. There's more to come with Jim Doyle next on Boomer Life on CL 650.
Celebrating the baby boomer lifestyle. This is Boomer Life on CL 650.